We're seeing a little bit of relief within the markets, but it's not much, right? There's a lot more work that needs to be done from the bulls over here to reclaim some very, very key territories. And in today's show, we'll talk about some of the worst case scenarios of what could potentially happen. When the market is downtrending, you really have to position yourself into the mentality and mindset of what is the worst case scenario? If things don't turn out the way that you want them to, what plans are you going to make? What provisions are you going to make? What changes are you going to make to your portfolio? So smash the like button, hit the bell notification, and subscribe to the channel. Let me know as well in the comment section. There is a poll that's attached into the comments feed over there. You can let me know what your thoughts are. Do you think that the worst is over, right? Do you think that that was the bottom before, at least in the short term, a little bit of a relief rally? Let me know, yes, it looks like it, or no, not yet. 578 of you now have voted, so you guys are busy voting. Get those votes in over there. While you're at it, again, guys, smash the like button. It really helps us to get the show content out. And I want to get straight into it. Of course, you are seeing on the dailies a little bit of a bounce over here, and this is par the course and exactly what you would expect, because Bitcoin did hit that key level that we're looking at yesterday into those high time frame fair value gaps, which matched up with both the daily, the weekly, and the monthlies, and that was at that key point of $83,000. So I'm not surprised to be seeing a little bit of a bounce over here. The real question is what happens next and where are we within the cycle? I want to talk about this a little bit in today's show, and I want to have a look at some of the worst case scenarios in the event that the market is fooling most of us most of the time, which is what it typically does do, right? So therefore, you have to position your mindset into that, right? We are seeing extreme fear in the stock market, and the stock market doesn't look even close to as bad as crypto. And the fact it's still got all these massive high highs and high lows on the weekly time frame for the S&P 500 futures over there. We also have Nasdaq also trending towards the upside. The MACDs don't look too great there, but sour. We have the Dow Jones with the potential of putting in a lower high over there, but still putting in higher lows. We have NVIDIA, which the earnings came out yesterday and price seems to be holding up okay. We have MicroStrategy, which has come down quite a lot. I still don't think it's found its bottom. I think the bottom will come in, or at least a big bounce, and is going to come in somewhere around this $200 region. We have Coinbase, which also came into the key zone over here, back testing into this trend line, which you definitely want to see Coinbase holding this level. If it does break this level, that becomes a mass deviation, right? I do have to be clear about that, because at this point, then you're breaking your diagonal trend line, which means there's a lot of pent-up liquidity over here, firstly. And not only that, you're breaking back into the trading range, which therefore means you'd consider this a deviation, at which point you have to target the mid-range. Again, remember, today's show is a little bit about thinking about what the worst-case scenarios would be, right? It's not to say that that's exactly what's going to happen. We still maintain a bullish, optimistic view on the crypto markets as a whole, on Bitcoin as a whole, but we have to outline the potential of how far down could things go and what is your worst case scenarios, right? So that is Coinbase. We have Tesla over here, which has come into the key area, deviating the top of the trading range. Similar to Bitcoin, you have a pretty clear invalidation when it does come to Tesla over here, where you can say this thing enters into kind of bear market territory if it does take out those lows, right? So that would be like Bitcoin taking out that I think it's $63,000 region. If Tesla took out this $212 region, that's going to be pretty severe. But right now, attempting to buy into this fair value gap, very similar to Bitcoin, right? The fair value gap at $83,000, and looking for a reaction or move off of that. So this is going to be the importance of the markets this week, is we are looking for moves. We've seen just liquidation after liquidation after liquidation. It's been absolutely brutal. And this is the one thing that probably concerns me the most, is that if you do have mass liquidations over the course of November, which was the first big one, then we went into the December liquidations, and then we had multiple along the way, right? We had again over here in February in the beginning, and now again towards the end of February, over $1 billion day after day after day, most of those coming from the long side. The question is, where's the new money going to come from? Where's the retail going to come from? You need to see some sort of massive fundamental shift. So we have had a full reset eventually into the fear and greed, now going into extreme fear. This mostly constitute what's happening around Bitcoin specifically, and therefore, because Bitcoin's dropping a little bit, this has come into extreme fear. We know that the altcoin sector has probably been, if you could draw this a little bit lower into Hades, that's probably where the altcoins fear and greed would be. Whatever goes beyond extreme fear is probably where most of the altcoins have been, right? So this is what I kind of want to have a look at today, because you can see this has come all the way down. It's been a very, very good reset. Now, if the bulls can maintain some of the key levels, most specifically around that CME gap, they can still maintain that high time frame bullish structure on Bitcoin, there is opportunity over here that this could have been a massive flush out, which typically in a bull market, we do see at least one that kind of goes, off the charts, right? Where the standards are, 20 to 30%, you'd get at least one of the typical 7 corrections that occur in a bull market that are extreme. 40, 50% corrections, wiping absolutely everybody out, and then running it back turbo one more time. The only thing that I'm looking at over here, which you do have to again consider, if you are in that 10 to 30, this chart essentially takes the history, which unfortunately we only have from the 1st of February 2018, that this has been accurately tracked over here from alternative.me, and it's been plotted onto this chart over here into the Cryptoverse chart. And you can see that unfortunately, the majority of these times where you go into that 10 to 20 read, you're going to print multiple of those reads, right? You're going to continue to print those types of reads. And most of the time, price continues towards the downside with that, right? So the hope, at least, that I think a lot of the market participants have right now is that your best case scenario is that you're kind of playing out something similar to what occurred over here back in 2021 in April, where price topped at $65,000, and then it got flushed all the way down into this region over here, where price came down to, I believe it was around just sub 30. I think it got to about $29,000. Now, this is essentially what a lot of people are going to be hoping for. What you don't want to see is that we're actually situated somewhere over here, which is following the 69K top, where price came down to about $36,000, put in a relief rally over there, and then ultimately we're in the depths of the bear market. And I want to talk about that today because there are some similarities, right? If we do have a look at the charts, there definitely are some similarities, right? So first and foremost, I do want to say, yes, momentum has come down quite a lot, and volatility has been relatively low until we now obviously started to expand. But the momentum oscillators, stochastic RSIs, have been reset, but they haven't turned back up yet, and we haven't yet necessarily found a bottom, right? So we do need to wait for that before becoming excited, because ultimately the bullish control zone occurs when the stochastic RSI holds up in these regions, as highlighted by the pink, right? You can see over here, in these pink environments, you get these strong trending moves. In the pink environment, you get a strong trending move. You had it over here, you got a strong trending move, right? You entered into that 80 zone, and you led from $67,000 all the way up to about $109,000 for Bitcoin over there. And the opposite is true when the stochastic RSI is all the way down below that 20 region. If it holds and maintains in this zone over here, you can get a strong trending move towards the downside, right? So first and foremost, I just want to say that that's one thing we need to be careful of. The next thing that I want to say is that it's pretty simple when you focus on the higher time frames, like the 2-week chart. If you want to get absolute safety in terms of finding the best time to position back into the market and saying that the sell-off is over, all you need to do is take out the 2-week high, right? The 2-week high currently on this candle, let's just zoom in, for Bitcoin is going to be coming in. There it is. It's going to be coming in on the 2-week high at there it is, 99,517, right? $99,517. Call it $100,000. If you can see high time frame candles closing above $100,000, then you can start to say that, maybe that was a big shakeout and we're going to start to move up. What you've noticed is that in most of these bearish markets, once you start to take out, if you start to break down and take out the prior week's low on a 2-week scale like this, that tends to lead into those downtrends, right? And now that's the problem. That's what we've started to see ever since the not this 2-week candle, but the one before that. We started to take out those lows, and then it's basically been downhill since then, and it's been a bit of a risk-off environment, right? And that can continue to trend that way. So criteria for getting back bullish on the super conservative side, which means you want every confirmation under the sun, simply wait to take out the 2-week high on a closing basis. If you do that, your stochastic RSIs will start to turn back up, and you'll have a much safer entry, right? Now, it still looks likely that we're probably following the trajectory of the price cycles as per the Bitcoin market cycle return on investment from the cycle bottom. When we compare to each cycle, we can see this is what it's looked like, right? We eliminate the blue one, which is the first cycle. We eliminate the second cycle because there is diminishing returns, right? But timing-wise, how far are we into the cycle? Well, according to this, we're only around 840 days into the cycle, and the expectation is that we should have a cycle that lasts as long as 1,000 to about 1,100 days, which means that this cycle would have come short. Is it possible that it's come short? Absolutely. We always have to mentally prepare for the worst case scenarios, right? So I just want to clear the air and say that I personally think that we will still follow the 1,000 to 1,100 day cycle and possibly even go beyond that, which means this is probably a massive shakeout over here, shaking bulls out of their positions. But at the end of the day, you have to position yourself in the sense that you want to protect your capital, right? Remember, if you don't protect your dollars, they will go somewhere else. They'll find a home where people do value them, right? That's the way that the markets tend to work. Now, this is the little bit more scary part, I guess, which I do want to talk about. And we can see some of the similarities over here, because I think really the question is, if we do focus on that 2021 cycle, again, going back to this chart over here, let's move this up. So we said, we're focusing on the fact that the fear and greed came all the way down into the zone, and we're now in that 10 to 20 region. Are we situated over here? Are we in this environment over here, back what we saw in 2021? Or are we in this environment over here, which you could be going into a multi-year bear market? This is the reality of the things that we need to face, right? This would be the craziest cycle ever if that were the case, that we're going into a multi-year bear market where for many of the altcoins, there was no alt season. Imagine that. Ethereum, imagine hitting the end of the cycle and ETH/USD didn't even take out its all-time highs, but made a macro lower high. That would be pretty catastrophic. Again, I just want to re-emphasize, I still believe we're following this trajectory and path over here, and this is a deviation. But as a trader and somebody who actually values my wealth, I need to protect my capital and consider what are some of the worst case scenarios. Now, we've had the obvious, which we looked at many, many, many months ago, bearish divergence happening on the BTC weekly time frame, right? So if we look over here, very, very similar to what occurred back in 2021, the bearish divergence, right? And then in this cycle over here, 2024, bearish divergence, price making high highs, and the RSI making lower lows and lower highs, right? Over there, as you can see, lower highs in play. Now, what's interesting is when you study this environment over here, doesn't it look very, very similar? The RSI pushed, all the way up above that 80 mark over there, set in a bit of a top over there. You had the RSI pushing into the 80 mark over there, setting in, you got the green, right? Because it was in the bullish control zone, set in a bit of a top, and then momentum just started to wean off, right? While price somehow grinded up higher and higher, the momentum was disappearing, the volume was disappearing, and the RSI started to make lower lows. Super similar. The other thing that I was looking at over here is now the RSI, which is reset all the way back down into the 50 zone. But when you look back over here, you did have the same sort of reset on the 50 zone during this period over here, right? So you can see, and we go back to 2021. Well, this also looks very, very similar, right? You had the RSI reset back into the 50 zone over there. Simultaneously, price proceeded to continue to run up all the way, hitting this trend line, which I'm about to highlight in just a moment. And once it rejected, it came back down into, again, just below the 50 zone. So if we zoom in over here, it came in just below the 50 zone over there. That was at about, the first test over here was essentially around the 13th of December. That came in at about 45. So I think if you were to consider worst case scenarios, there is always a possibility that we're printing something similar to that candle, right? So again, I'll highlight it. This candle over here, what if the RSI is sitting in this territory? And that's essentially what's coming next, right? We have to prepare for the worst case scenarios, right? So let's highlight that again. If you look at this candle over here, this candle is starting to look very, very similar, following hitting the second rejection of that level and the RSI coming back down to exactly the same place that we had in this circled area over here, right? And then what happened next? Obviously, you held sideways for a little bit. You had a little bit of a relief rally over the next 2 to 3 weeks. And then ultimately, price just continued to drop over there. So again, simply just highlighting some of the worst case scenarios. I still believe that what we're probably doing is we're playing out this part of the cycle over here, but you have to acknowledge that there are a lot of similarities. The other thing to be at least cognizant of is going to be this trend line over here, which you can see ever since the price cycle tops, you tested, you came back into this area. My point being over here is that I don't really see the value in the longer term risk to reward ratio being an investor in the space long term, right? I would rather, when I say long term, I mean, let's say in the hopes that we're in this environment over here, and we're going to put in another run up, and test that trend line, well, what price would that give you for Bitcoin? What this means is I'm probably more interested right now in playing shorter term trades, so still remaining in the market in the sense of USDT, and then jumping into other at least trades here and there wherever an opportunity presents itself. But if the cycle plays out to the 1,000 to 1,100 days, which would be anywhere between, our base case was always September to October for a cycle top. Well, where would that put you? Well, on this trend line over here, it's going to be about $119,000, right? So if you exited the majority of your positions, you know, between this 95 and about $110,000 region, that's pretty close to selling to the top, right? So essentially, that's what I'm looking at. That's my thoughts in terms of a worst case scenario. My plan of action over here is basically to just take the market as it comes and remain very concentrated in very few positions, and basically take the best trade opportunities that are presenting themselves on each given day, as opposed to simply blindly buying and holding a portfolio and hoping that we continue to rally into, you know, an insane altcoin season like we've previously seen in these peaks. So these are some of the worst case scenarios. Now, there are also some other scary signs and differences that are taking place over here, and it could be manipulation, it could be a bit of a deeper shakeout. But if you look at something like this, which is Total 2, which subtracts Bitcoin from the mix over here, and it has a look at all the altcoins, Ethereum included, etc., and removes Bitcoin, well, the super guppy indicator on the daily time frame now has turned red. And again, if you do go back over here, yes, there was a period over here where it did turn red as well, right? Turned red, held red for a little bit of time, and then started to run up. But again, you have to make these comparisons, right? At that point in time, we hadn't put in the bearish divergence yet, right? Price had come down over here, the RSI reset. The bearish divergence was only confirmed once price hit this level and the RSI started to reject on Bitcoin. And this is the environment where that Total 2 started to turn red on the super guppy indicator, which again means that you do have to be careful that we're not in this environment. That's what you need to be careful of, right? Which is why I continue to remain risk off in the markets right now. And I prefer to just look for shorter term trades, get in, get out, get in, get out. And I'll continue to be a trader probably for the rest of the cycle, as opposed to a longer term investor. That's the plan of action, right? So we can have a look at a bunch of the other charts over here in terms of also the super guppy and what it suggests on Total 3. Interestingly enough, Total 3 has not yet turned red. The reason Total 2 has is because Ethereum has been hit so hard. If you look at others, well, others has turned red, right? The others is subtracting your top 10 from CoinMarketCap or CoinGecko. So things we need to look at. This is one of the simplest, most easy trend trading indicators that you can utilize. It's pretty simple. You know, when it transitions from gray into green and you start to get a cross between these ribbons, the green and the blues, you know, that's essentially a long signal where you're looking to time strong trading moves, right? And you want to maintain your positions in that strong trading moves. When it turns gray, it's kind of neutral territory. You sit on your hands. And theoretically, when it starts to turn red, you'd be looking for short trades. Now, I'm not advocating you try and short altcoins right now. I think you can get much bigger relief rallies, massive relief rallies, hundreds of percent, 200% moves even to set in a lower high. But you have to be aware of that, right? Here you have Total 3 measured against Bitcoin, also still red. Others measured against Bitcoin, also still red, which means it's definitely not worth taking the risk of moving spot into the altcoin sector right now. So another chart to keep a close eye out on is going to be the USDT dominance, right? As USDT dominance continues to grind towards the upside, of course, that puts pressure on the crypto market and risk on assets. And the key level that I'm looking at is really this higher zone, right? That would kind of be also a worst case scenario. If you do break above this region, at that point, you'd know for certain that you're in a bear market, right? A multi-year bear market, and it's going to take a while to recover. This would be pretty brutal. So let's still remain optimistic that we are following this trajectory. And if we are following this trajectory, you know, what you would want to see is some sort of a weakness at some point soon, possibly something like that, and watch this start to turn back over. If you can break below the horizontal over here, which is going to be $3.60, or sorry, not $3, 3.63%. That is where your altcoin season will occur, right? Until then, we can't say that any sort of alt season will occur. And what we can also do is we can have a look, you know, in this environment, which is pretty similar, right? If you go back to where we had that double top scenario, let's go back over here and just see how this lines up. So ultimately, when you started to put in the top over here, that was in April 2021. And if you go over here to around April 2021, you can move this up ever so slightly. It was around about here, right? So as the USDT dominance met this trend line, started to grind into that region and rally up, that was your top. And then your secondary top, which was this one over here, came in right there on the test of that RSI over here, where it started to reject, putting in the bearish divergence. And that essentially occurred right over here on this line, the white line running down the screen, which was November 2021, right? So you put in one big move, you came back down, and then this thing absolutely ripped. I hate to say it, but theoretically, you have done something similar, right? You hit this trend line. We put in that first major top over here. If we do look at Bitcoin dominance, so let's just quickly see that. That was the March period, right? If you look over here, RSI, you tested the RSI. You hit that in March over there. You started to put in your high over there. RSI started to trend down over here. And if we look back to the USDT dominance, well, we came a little bit lower, but essentially we're starting to move right now. And where is that, right? The test of the top over here and the rejection with the RSI over there. These are the worst case scenarios. We have to have this talk, right? I don't want to be somebody that tells you, buy the dip, the dip that keeps dipping. The hopes are still alive though until you get here, right? I think almost everybody will fall on their sword if you start to break below $66,000, $66,700. That's where people will start to admit something very different is happening over here, and we're in big trouble, right? At that point, I would expect that probably the USDT dominance is breaking above this region, right? So again, guys, I just want to reemphasize, I'm going to keep saying it. This is your worst case scenario. This is the worst case scenario. I would find it very, very strange to have not really had a cycle with Bitcoin dominance dropping at all. We had a cycle. Then this would have been the first cycle that we had Bitcoin top, assuming that it plays out that trajectory and it's topped out and it's all over. This would have been the first time that we topped with strong Bitcoin dominance without extreme. We had greed. Yes, we had greed in the meme coins and things like that, but we never had a market-wide euphoria phase, right? So that's food for thought. Now, we've spoken a lot about what gets you bullish again. And I said, this is your opportunity cost, right? By sitting out of the market, if the market starts to move up and you wait for those confirmations to get in at a higher price, you're going to pay a price. You always pay a price, right? The price that you're going to pay is called the opportunity cost. Your opportunity cost right now is getting long again, on Bitcoin if it starts to get above this region, which would be about 14-15%. If you exited where I did, my opportunity cost was only 6%, right? Because I exited over here on this candle at about $92,000. So for me personally, my opportunity cost is about 6 or 7% before I get long again. And that number will change, right? As we start to print lower highs, that is under the presumption that we do, put in rejections over here. If you reject and you put a lower high, now my opportunity cost is 0 because I would be I would get my confirmation back above the next lower high, right? If we break that lower high and we put in a higher high, that is essentially my trigger to go long. And this is how you basically get into trends which are now towards the downside. And if it then sets in another lower high over there, now this becomes my invalidation, which is below my exit price, at which point I haven't lost anything, right? I can't lose. So that is the decision that you need to make. At the end of the day, in terms of our shorter term analysis, price has come into the levels that we wanted to see. You can see we've now sucked into this low volume region, which we said acts like a magnet. We've had this magnet here for a long time. And we said if bulls can't get things running very, very soon, essentially you're going to come back down into this magnetic zone, into the pocket over here. And this becomes a high probability bounce zone. We have seen some volume on the selling over here, but it's still not high enough and we didn't get enough of a reaction on the red candle over here closing strong in order for me to confirm that this is the spring phase. Remember, that's one thing we looked at yesterday. If you want to get more bullish hopium, please go to yesterday's video. I showed exactly what we'd be looking for in the event that you print a spring phase, right? Okay, a spring phase in Wyckoff. If you don't know what I'm talking about, you have to go to the video. So we've lost some of these key levels. Look, you've lost the 50% level. You closed multiple candles below that. You haven't got back above the 21 weekly exponential moving average, which, by the way, will now slowly but surely start to roll over. And yes, there will be relief rallies, right? There will be relief rallies where you might even see something like that. And that's where you need to be careful and you have a decision to make, right? Decision time. It becomes decision time when you see something like that. This was our highest probability bounce zone, exactly where this wick came into. We haven't changed any of this analysis. It's been here for weeks now. You can go back even months now. We highlighted you have a weekly fair value gap. You have a daily fair value gap. You have a monthly fair value gap. You have your Fibonacci golden pocket between the 0.65 and the 618, which lined up between a price level of $81,684 and $83,000. I told you that at least in my opinion, the highest probability bounce zone over here is going to line up between the 618, the daily fair value gap, and the monthly fair value gap. And that's exactly where we got the reaction, right? You can see the wick that occurred over here, reclaiming the previous quarterly mid-range. So there's still a lot of work to be done over here, right? Again, where do I get long? Go watch yesterday's video if you want a much more pinpointed, precise analysis. But risk to reward, if it happened now, the analysis changes over time as we print more and more candles. Assuming it happened like this over the next coming days, I would again be looking for a big, strong move up like this. I'd want to see a weekly wick or something of that sort with high volume, right? Massive volume over here. And then a reclaim back into the trading range, which means you need to start to close price action above $90,000, right? $90,000 to $91,000. If you do start to do something like that, that's a good sign. And then you can say, you know what, maybe that was just a shakeout, a big deviation back into the range. And then we're going to run it up one more time. And then you get that move up. But again, I want to go back to the risk to reward, right? Even if you do run it up one more time, even if the cycle does end in September, October, which has been our original prediction based on the timing factors of this chart, based on the timing of the halving cycle, as well as what we've seen from the cycle low in terms of how long these cycles last, then you're still going to meet this trend line, right? And this trend line is going to act as resistance. And therefore, you know, you're looking at about $120,000, which again, I just want to re-emphasize is why I would prefer to look for short-term trades where, you know, I can make 30, 40, 50% moves on a trade as opposed to, you know, trying to get the moonshot target. The moonshot target came in by getting in the majority of our positions around the lows, which is exactly what we did, right? Any of you can feel free to go back. Just all you have to do is go here. This is very easy. If you want to vet me to see my reliability because maybe you're somebody new, all you have to do is go and look, what did I say on YouTube between the 14th of November and most specifically on the 27th of December is basically where I started to flip long. I remember very clearly I was on holiday at a beach house and I pulled out my laptop and said I have to do a stream. There was a massive falling wedge. It's still on the thumbnail. You can go and look at that. Go look what I said on the 27th of December. That is where the moonshot trades came from, right? So to think that we haven't had a bull run, at the end of the day, we have had a bull run, right? So again, opening up the possibility, a sobering reality, could it be that this bull run was only, you know, around a 600-700% move from that low to at least this high is about 530. But in total, I think Bitcoin did about a 7x if you bought the exact wick low. Whereas, you know, the other cycles did this, right? The other cycles did this, 1,500, but there will be diminishing returns. So I'm not here to tell you that it's definitely all over. Absolutely not. In fact, my base case is still that, you know, Bitcoin will find some sort of support here. Maybe we put in one more rejection, run it down into the CME gap at $77,000, and then start to reaccumulate over the next coming months. And then we start to mark up again over the course of, you know, September, October, November, where we do find the ultimate top. I would still like to see that. In fact, we have found major support over here at the 200 moving average, which is, of course, one good sign. But there is a pending bear moon that's going to be coming up. And we've seen the success rates of this, right? In an uptrend, every bull moon tends to lead to very, very powerful pumps. But in a downtrend, you would expect the exact opposite to occur, where every bear moon results in very, very powerful dumps, right? As opposed to bull moon, powerful pumps in an uptrend, bear moon, powerful dumps in a downtrend, and the bear moon comes today. I think it's today. Look outside. Howl at the moon, ask it for help. It's coming today. We do have the hourly time frame over here, just gauging the lower time frame trends. it's still a downtrend over here. You really need to get back above about $89,000 on the hourly. We'll see if it finds resistance at the 50 EMA, which keeps rejecting price over there. This is a nice candle. It came into the 618 in terms of the fib extension. So I went from the low to the high. Looking at the fib extensions for downside targets, it held at the 1.618 on a closing basis, but wicked through. So there will need to be a bit of work here, right? Everyone will be looking for reasons to go long. I can just see it. Traders are going to be looking for any sign of, maybe some sort of inverse head and shoulders over here, which could break price up. If it does, and then you start to reclaim some of those key levels, great. We jump back in, no problem, no problem. The point of today's show is to simply highlight what some of the worst case scenarios could be. That's it. That's all that I wanted to do, is to help you guys understand to look at it from various perspectives. In whale room, we've in fact been long, right? Off of that bounce region, we highlighted very, very significantly and specifically that this is going to be a key zone, at least looking for a short-term bounce. And you can see Josh, the Navigator, one of our traders, of course, getting that trade over there up 43% already. He is trading the Blofin competition as well. So for those of you that want to join in, it's the Ace of Trades. If you want to follow along, there's a link in the description below over here. Blofin, no KYC required. They have 5 blocks for security. So it means they don't custody the coins themselves, which means there's no chance of a rug or a hack or anything like that. Super, super safe exchange, high liquidity. The competition ends in 7 days if you guys do want to join and participate over there, right? So our traders are crushing it in the group over here. Feel free if you want to jump into whale room. Now, let's look at, without the super guppy indicators and all that fancy jazz, let's have a look at the general structure over here, right? So if we do have a look at the general structure, just a very quick analysis, you got 1, 2, 3, 4, 5 in terms of the moves over here and the wave count. There is also fair value gaps on the total cryptocurrency market cap, which I'd be keeping an eye out on. So this is where things will start to fall apart, is if you do start to lose some of these key levels, right? You've come very, very close on the total cryptocurrency market cap in terms of hitting this. This could come down to about the midline, which is the fair value area, is going to be about $2.55 trillion market cap, right? So it would be great to see it come into that and then still somehow see the total cryptocurrency market cap run up to 8 to 10 trillion, which is like some of the more realistic targets for an end of cycle prediction, right? So this is the better case scenario, is that you come into this turned out to be a massive shakeout, hold this level, reclaim. Where do you get long? It's going to be similar to Bitcoin. If you are thinking of trading any altcoins or anything like that, and you want the super safe entry, you need to get back above 3.25 trillion. That's the level to reclaim right now. That will get you above those rejective candles, above the breakdown area. And crazier things have happened, right? Who knows? Maybe something will happen today and somehow this candle will start to move up into the end of the week and actually close green. That would be absolutely crazy. Even if it did do that, you would then be left with a massive inefficiency, which in any case, you would be looking for some sort of a retrace back down to fill some of that, and then you can get in at still a great value area, right? So similar to Bitcoin crossing below the it's over area, which I gave you, which is this 66,783, that's your it's over area. If you look at the total cryptocurrency market cap, your it's over area is going to be coming in underneath this zone over here, which is going to be 2.19, right? 2.19 trillion. So we'll put that in red, and we'll also add in, similar to the Bitcoin one, that is the dead zone, right? DED, our dead zone, right? It's over. Dead zone. We'll make it nice and big for you. There we go. That's the area where the cycle's at jeopardy, and possibly you are playing out the worst case scenario. I love the comment. Soloway was right. 12K all along. Bereth Soloway was correct. Okay, cool. What else have we got, guys? What else have we got? Bitcoin dominance. Interestingly enough, Bitcoin dominance is starting to roll over here, which is not what you would expect. I can't really give you definitive reasons or answers as to what this means, but I guess people, maybe they haven't been flushed out enough, believe it or not, that they're still willing to jump into altcoins while Bitcoin is crashing. There's crazy people in the space, but that's essentially what's happening over here. This is coming down. You have your 9 and 18 exponential starting to roll over. Look, in terms of, was this a lower high? On a closing basis, it was, right? You've theoretically put in a little bit of a lower high over here It almost put in a bearish engulfing, but not quite. But taking out these lows, soon to maybe make some new key swing lows. We spoke about this yesterday where we said if you wanted, the aggressive entry, it would be that, right? If you started to break below that confirmation, alt should outperform. That's your aggressive entry. But if you want the safe entry, you would need to still wait for a break below 58.57. Okay, so there's that. You can see Sol putting in a little bit of a bounce over here. It's got also still, like the others, a lot of work to do, right? A lot of work to do for these things to reclaim some of the key levels. You do have major support at about 122. Given how strong this downtrend has been, don't be surprised if you do see strong relief rallies that could do something like that. Sol could run all the way up to about 167, even 170, and it could still be bearish and break below 100 before, so deviate the bottom of the trading range, and then hold up and then possibly reverse, right? That's still possible. So you need to be aware of that. For those of you out there that do want to trade any of these altcoins, also want to let you know there's a $30,500 sign-up bonus up for grabs, specifically with CoinW. If you use the link below, you can claim that. It depends on how much you deposit. You can see the rewards are tiered. Realistically, most of you should be able to qualify for at least about $1,000, because all you need to do is $5 million in trading volume, which is not that hard. Sounds like a lot, right? But when you're on leverage and you go in, out, it builds up very quickly. Okay. Let's see what else, guys. I'm having a look quickly at the comments if there is anything to bring up. And again, I want to calm your nerves. I'm not here to scare you. We outlined today's show. The point is the worst case scenario. I'm not going to bring it up much. We've spoken about that. It is what it is. We hit the 83K key zone. That was the sweet spot. That's where we wanted to see price move, and it's moving. But is it enough, right? Is it enough? That's the question. We don't know yet. Okay, Mantra. Let's have a look at Mantra, because Mantra has been one of the top performers, right? It's definitely for sure been one of the top performers. But I think I noticed as well that it was coming down a little bit over there, and it took out some of these areas, which is creating a new swing low, which is interesting, right? So there's your Mantra chart. Now, you're going to have a lot of support over here in the form of a massive inefficiency. This is a large one because this was such a big pump, right? So I probably wouldn't buy any of this, but if you're holding the position over here, you're full invalidation. If you take out this 540, people are going to start to short this like crazy, right? As long as it holds up over there, your expectation would therefore be dip into this zone, reclaim, and then start to run it up again. All right, cool. Let's see, XRP. Sure, let's have a look at XRP. Where's the XRP army? How's the XRP army doing? I see they're calling for $10,000 XRP, right? It would create a market cap bigger than the stock market. I read their theory is that it's swift payments and it's going to do $5 trillion a day. And for some reason, their calculation is $5 trillion a day equals like $200 quadrillion market cap, and therefore it's going to $10,000. At least this was something that went viral on TikTok. It's creating new swing lows, lower highs, and new swing lows. Remember, all you have to do is put it onto a line chart if you do want to get a little bit more of an indication of what's happening. I even see when you put on a line chart, it helps you to seek out some clarity in terms of identifying chart patterns. And there is always a possibility that a head and shoulders formation is forming over here as well, right? So just be aware of that. A head and shoulders formation could be forming over there. I guess your confirmation that that's starting to break down would be if this starts to lose $2.05 on a closing basis. Keyword on a closing basis, right? $2.05. You don't want to start to break below there. So you'd want to see this form a major low and move up if you are bullish on XRP. But it is creating new swing lows, right? Cool. What else? Let's see. Yes, let's have a look at Phantom Sonic. Again, I'm going to the Phantom chart for the price history. It's got a nice move off of this. This was, okay, I think that was bad reporting on the price action. So this is probably a better chart to look at because it's not meant to have that massive wick that went down. The area that I'd been looking at over here was the 50% level, right? So from my perspective, I wanted to see, if the market is going to continue bullish and Bitcoin was going to bounce hard off of $83,000, I really wanted to see this drop, into like the 50% level, hold that level, put in a high low. There's your last high low. So lows, high low, next high low, and then continuation. But there was definitely a lot of selling that came into this zone over here. That is, of course, on a daily time frame perspective. All right. Render, we can have a look at render as well. How's this one done? USDT. Okay, render. All right, this one has been absolutely obliterated, right? Smash, smash, smash. We have to probably redraw a whole lot of these charts, but let me just clean it up. So testing a lot of this as resistance. Okay, look, if it can't bounce from here and reclaim some levels, you know, your next major support is going to be, I'll give you a little bit of a broader range between about 240 and about 280, right? 240 to 280. That's going to be the next area of interest. Okay, we'll bring up this pi. I know that people have been going crazy over this thing, so let's bring it up. Pi network on OKX. I think this was launched by like MIT or Harvard or Cambridge or something like that. Remind me who it was. I remember from years ago, they said it's the biggest Ponzi ever, but that's not what you asked, right? You want to have a look at the charts. We don't have enough price history over here, but it's okay, right? It's floating onwards and upwards relative to the rest of the market. Very hard to make any comments. I guess your key lows that you want to hold is you wouldn't want to see it break below $1.59. Must hold above $1.59. What Pi network does, who knows? 3.41 squared. I don't know. What does it do? No clue. Let's have a look at Rune. All right, Rune. Have we lost our original Rune chart? Let's just double check. Okay, I'll just bring up another one. Now it's gone. Sorry, guys. 1 second. Rune USDT. It is. Got it. Okay, Rune, in the short term, I'm on the 4-hourly chart. You know, it is, of course, floating up over here. It's the same as what we said last time. This is going to be major resistance. You need it to start to break above some of these key levels in the short term to at least shift the structure, right? This is going to be huge resistance between $2 and $2.36. So if you're trading it out, you know, default to a range trader, if it gets into this zone, I would expect it's probably going to reject and come all the way back down. Okay, 𝗬𝗎. Let's have a look at 𝗬𝗎. 𝗬𝗎 was one that was holding up slightly. Let's see. But also, you see, the problem is on a closing basis, it's creating new swing lows, right? So you tested, you know, into the wick over here, started to bounce off of that zone. It doesn't have strength. It's still weak. It is still weak, right? You need to see more for a reversal. Very much like Bitcoin, you need to get back above the breakdown level. It's much safer to enter that way, right? Otherwise, you expect relief rallies into that level to be rejected. $3.46. That's usually what happens. Okay, AI16Z virtuals, we can have a look at those, but I think that they're going to be wrecked. USDT. Where are all of our charts going? Let me just try that one more time, guys. I don't know if someone's deleted these things. AI16Z, because we already charted all of these. AI16Z, USDT. It's not here. Okay, I'm going to have to pull up a new one. Let's pull up this one. And you see it's gone. Okay, there it is. Got it. Bad, right? All the way down to lows. It will take time. These things will range. It will range. So this is going to be a range low. It could even bleed through this range level. I wouldn't be a buyer. Honestly, I wouldn't be a buyer of these things. I would rather wait for these things to reclaim and change the structure completely and start to form an uptrend. Just go look at the Wall Street cheat sheets and you'll see exactly what I mean. These things look super similar, right? Big parabolic move, complacency bounce, anger phase, denial, move into depression. And now you're in that depression phase where it just ranges at those lows for very long. And the volume will drop off, right? It will range and range and the volume will drop. And it might even bleed through that. And then eventually it reclaims. So that's the truth. That's the truth. Virtuals, we can have a look at. I think virtuals, I remember was one of them that I said in the moment when this was happening that you better hope this isn't the complacency bounce because you broke this upsloping trend line. And that's exactly what you got, right? That was the complacency bounce. I should have just opened up the biggest short ever and it started to bleed all the way through. So I'd expect that virtuals is eventually it's going to make its way all the way back down, full retrace, 54 cents. Okay, I know you don't want to hear it, but that's what I expect, probably about 54 cents. All right, guys, if you do want more, remember, just please jump into Whale Room. That's going to be the easiest place. I'll be doing a live session there today as well with everyone. We're doing short-term trading over there to still make money in the market. And then let's see what you guys voted. Was that the bottom before a big relief rally? You know, in no particular order, I'm just going to click one and see. Okay, you guys say not yet. So 53% of you know. A big divide over here, 47% not. That's why we've given you multiple opportunities over here to see, you know, worst case scenario, and then what your best case scenario would be is reclaiming some key levels. That is it from me, folks. I'm going to see you all on the next one. I hope you all have a lovely day. Thank you so much for joining, and we'll catch you on the next one tomorrow. Have a good day. Cheers for now.